Right now, somewhere between $1,300 and $3,300 in tax savings may be sitting unclaimed on a return you already filed, and the IRS is not going to send you a letter about it. Quick note before we get into it, everything I cover here is educational information, not tax or legal advice, so always run your specific situation by your own professional. Now let's talk about your money. Here's what is happening in June 2026 that most retirees have not fully worked through. There are three separate financial changes that took effect this year, one involving your Social Security deposit, one involving your 2025 tax return, and one involving your prescription drug costs at the pharmacy counter. Each one individually could put real money back in your pocket. But here's the part that frustrates me most when I talk to seniors about this. For a significant number of people, it is not that the benefit does not exist. It is that one form was never filed, or one number was never checked, or a tax preparer ran through the return without catching a new deduction that only took effect this year. And I want to be direct about something. None of these benefits automatically comes to you. The Social Security Administration does not call you when you are overpaying a Medicare surcharge. The IRS does not flag your return and say, "Hey, you missed this new $6,000 deduction." Your Part D drug plan does not call you when you have crossed the out-of-pocket cap and your next prescription should cost you nothing. The system waits. The money waits, and the only people who capture it are the ones who know which specific numbers to check and which specific forms to file. That is what we are covering today. 3 changes, 3 actions, and by the end of this video, you will know exactly what to look for and exactly what to do. I am Richard Holt, and for years I have been focused on one thing: helping people in and around retirement understand the tax rules, Social Security rules, and benefit programs that directly affect how much money lands in your pocket every month. Not complicated investment theory, not abstract financial planning. The specific rules that determine whether you overpay or get every dollar you are owed. Let's start with your Social Security deposit, because there is a number in your bank account right now that most people never actually compared carefully enough. Change 1. Your real 2026 COLA and the IRMAA surcharge that may be reducing your check. Pull up your January 2026 Social Security deposit, then find your December 2025 deposit. Actually do this. Grab your phone, open your bank app, and put those two numbers side by side. I will wait. The difference between those two numbers is your real net COLA increase. And for the average recipient in 2026, that number was probably not what the headline suggested. Here is exactly what happened. The 2026 cost of living adjustment was announced as 2.8%. For a recipient collecting around $2,015 per month, that produced a gross increase of roughly $56 per month. That is the number that made the news. That is the number most people expected to see in their January deposit, but Medicare Part B premiums also increased at the same time. From $185 per month in 2025 to $202.90 in 2026. That is an increase of $17.90 per month. And here is the part that trips people up. Part B premiums are automatically deducted from your Social Security check before it ever reaches your bank account. That $17.90 comes straight out of your COLA before you see a single dollar of it. So the average recipient's actual net deposit increase in January was not $56. It was about $38.10. The headline said 2.8%. What most seniors actually felt in their January deposit was closer to 1.9% after Medicare took its share. The Part B premium rose at nearly 3.5 times the rate of the COLA itself. That is the second largest Part B premium increase in program history. Now, if you are a senior whose Social Security benefit is on the smaller side, say your individual COLA dollar amount was less than $17.90, there is a protection called the Hold Harmless provision. Under this rule, your Part B premium increase in any given year cannot exceed your actual dollar COLA increase. Your net monthly check cannot go below what you received the month before as a result of a premium increase. For roughly 1 million seniors, this protection was applied automatically in January. Their Part B premium was capped at exactly their COLA dollar amount, preserving their net check. If your net change in January looked smaller than expected but your check did not go down, the Hold Harmless rule may have been working on your behalf. Call the Social Security Administration at 1-800-772-1213 and ask specifically whether the Hold Harmless provision was applied to your account for 2026 if you are uncertain. Now here is where it gets important for a specific group of seniors, and if this applies to you, there is one form that can put a significant amount of money back in your monthly deposit, within 60 to 90 days of filing it. If you are currently paying an IRMAA surcharge on your Medicare premium, listen very carefully. IRMAA stands for Income-Related Monthly Adjustment Amount. It is a surcharge Medicare adds to your standard Part B premium if your income 2 years ago exceeded certain thresholds. The 2026 IRMAA surcharge is based on your 2024 tax return. If your modified adjusted gross income in 2024 exceeded $106,000 as a single filer or $212,000 as a married couple filing jointly, you are currently paying more than the standard $202.90 Part B premium each month. The first IRMAA tier adds $81.10 per month. The second tier adds $204.40. Higher tiers go up from there. Those surcharges are deducted directly from your Social Security check, just like the standard premium. Here's the situation I want you to think about carefully. Your 2026 surcharge is based on what you earned in 2024. If 2024 was your last year of work and you retired at the end of that year, or if you had a large one-time income event in 2024 like a property sale, a large retirement account distribution, or a pension lump sum, you are paying a premium surcharge right now in June 2026 that is based on a financial picture that no longer exists. Your income has dropped. Your surcharge has not. Every month you pay that surcharge on outdated income is money you cannot recover retroactively. The fix is Form SSA 44, available free at ssa.gov. This form lets you report a qualifying life-changing event and request an immediate recalculation of your Medicare premium, based on your current income, rather than the 2024 figure Medicare is currently using. The IRS lists specific qualifying events on the form. Retirement is one of them. Reduction in work hours is one of them. Loss of pension income is listed. Death of a spouse is listed. Divorce is listed. If any of those events occurred in 2024 or 2025 and your income drops significantly as a result, the SSA 44 is the mechanism to trigger a recalculation. And before the normal 2-year cycle would catch up. Here is what most people do not understand about this, and it is important. Some seniors assume that since they filed their 2025 tax return showing lower retirement income, Medicare would automatically update their 2026 premium. That is not how it works. The 2-year look-back means your 2025 return affects your 2027 premiums. The SSA 44 is the only way to get a recalculation applied to your current year premiums. If you are paying an IRMAA surcharge and your 2024 income does not reflect what you are living on today, this form is not optional. It is the form that stops the overpayment. Submit the form in person at your local Social Security office or by certified mail. The recalculation typically takes effect within 60 to 90 days of submission. When you file it, bring documentation of the qualifying event. For retirement, bring your final pay stub, a letter from your employer confirming your last day, or your pension benefit statement. If the first IRMAA tier applies to you right now, eliminating it saves $81.10 per month. That is $973.20 per year going back into your Social Security deposit. At the second tier, you are saving $204.40 per month, which is $2,452.80 per year. Every month you wait is a month of that surcharge you cannot recover after the fact. Go to ssa.gov, search for Form SSA-44, and download it today. Now here's where it gets important for your tax return, and this is the change I hear about most. From seniors who have no idea whether they received it or not. Change 2. The $6,000 senior bonus deduction and what to check on your 2025 return. Find your 2025 federal tax return. Right now, if you can, it is either with your preparer, in your email if you use tax software, or you can pull a transcript for free at irs.gov using the Get Transcript tool. Open it and look for one specific line item before we go any further. Here is what you are looking for. As part of the One Big Beautiful Bill Act, Congress created an additional federal tax deduction specifically for people who are 65 or older. The amount is $6,000 per qualifying person. For a married couple where both spouses are 65 or older, the combined deduction is $12,000. This applies to your 2025 federal return, the one most of you filed this past spring. This deduction is different from anything in the previous tax code in one important way. It stacks on top of your existing standard deduction. And on top of the additional senior deduction that was already in the tax code before this law passed. You do not have to choose between them. You do not have to itemize. The deduction is available whether you take the standard deduction or itemize, and it reduces your taxable income from the top down. The deduction phases out beginning at modified adjusted gross income of $75,000 for single filers and $150,000 for married filing jointly. If your income is below those thresholds, the full amount is yours. If your income sits near those boundaries, a portion of it is still available, depending on exactly where you land. On your 2025 return, this deduction should appear as a separate line reducing your adjusted gross income. It will be labeled as the Enhanced or Additional Senior Deduction, or you may see reference to the One Big Beautiful Bill deduction. For a single filer over 65, the amount is $6,000. For a couple where both spouses are 65 or older, it is $12,000. If you see it on your return, your preparer applied it correctly and you received the full benefit. If you do not see it, you may have a refund waiting, and the window to claim it is open until April 2029 through an amended return. Here's what I want you to do if the deduction is missing. Call your preparer this week and ask one specific question. Do not ask a general question about deductions. Ask this: was the enhanced senior deduction of $6,000 from the One Big Beautiful Bill applied to my 2025 return? A preparer who is current on 2025 tax law will answer that question immediately and specifically. If they hesitate or say they are not familiar with it, ask them to pull up your return and show you the deduction line. If the deduction was not applied, the fix is Form 1040-X, the amended return. Filing a 1040-X to add this deduction is a straightforward amendment. But I want to be clear about something. Every month that refund is sitting in the IRS system instead of your bank account is a month, it is not working for you. If you are owed $1,320 as a single filer in the 22% tax bracket or $2,640 as a married couple, do not wait on this. Now, most people explaining this deduction are stopping at the face value calculation, and I want to make sure you understand the full picture. Because for a meaningful number of seniors, the actual benefit of this deduction is significantly larger than the straightforward math suggests. The reason is the provisional income formula that determines how much of your Social Security benefit is federally taxable. Let me walk through this with one specific example so you can see exactly how it works. Say you are a single filer. Your pension income is $18,000 per year. Your Social Security benefit is $18,000 per year. Your provisional income, which the IRS calculates as your adjusted gross income, plus any tax-exempt interest, plus 50% of your Social Security's YCA, comes to $27,000. That puts you above the $25,000 single filer threshold, where 50% of your Social Security begins to be taxable. You are paying federal income tax on $9,000 of your Social Security benefit at your marginal rate. Now apply the $6,000 senior bonus deduction. Your AGI drops by $6,000. Your provisional income falls to $21,000. That is below the $25,000 threshold. Your Social Security becomes completely tax-free. The direct tax saving from the deduction at 22% is $1,320. But eliminating the tax on $9,000 of previously taxable Social Security at that same rate saves you an additional $1,980. Your total benefit from one $6,000 deduction is $3,300, more than double the face value calculation. This multiplier effect applies to anyone whose provisional income was hovering near those thresholds before the deduction. The closer your provisional income was to $25,000 as a single filer or $32,000 as a married couple, the more powerful this deduction becomes. Some seniors will see a much larger benefit than the headline number suggests, and some preparers ran a technically correct calculation without ever walking their client through the full interaction. There is one more connected action I want to mention. If you are currently having federal income tax withheld from your Social Security check using Form W-4V, recalculate your actual 2026 federal tax liability after accounting for the $6,000 senior bonus deduction. For many seniors, this deduction brings their effective federal tax liability down significantly, sometimes close to zero. If your withholding rate has not been adjusted to reflect that lower liability, you are prepaying tax every month that comes back to you as a refund 12 to 15 months later. Adjust your W-4V and keep that money in your monthly deposit where it belongs. Most people stop here, but don't, because Change 3 is the one that requires action specifically in June. Change 3. The Part D drug cap and why mid-year is the critical moment to check your number. Starting in January 2025 and continuing in 2026, every Medicare Part D prescription drug plan and every Medicare Advantage plan that includes drug coverage has a hard annual cap on what you pay out of pocket for covered medications. In 2026, that cap is $2,100. Here is what that means in plain terms. Once your total out-of-pocket spending on covered Part D drugs reaches $2,100 during the calendar year, your cost for every covered medication drops to zero for the remainder of the year. Not reduced, not discounted, zero. Your plan pays 100% of covered drug costs from that point through December 31st. To put that in context, before this cap existed, seniors taking high-cost medications for conditions like cancer, rheumatoid arthritis, multiple sclerosis, or heart disease could face $8,000 or more in annual out-of-pocket drug costs. As recently as 2024, you had to spend $8,000 to trigger catastrophic coverage. In 2025, that dropped to $2,000. In 2026, it is $2,100. The protection that previously required $8,000 of your own money now activates at $2,100. That is one of the most significant changes to the Medicare drug benefit in decades. You do not need to sign up for this separately. Your plan tracks your cumulative out-of-pocket spending automatically. Once you cross $2,100, the pharmacy system recognizes it, and your cost drops to zero at the counter. The mechanics work without any action on your part. So why am I talking about this specifically in June? Because the cap resets to zero every January 1st. Every year, you start accumulating toward the $2,100 threshold from scratch. Seniors who take regular high-cost medications often reach the $2,100 threshold sometime between April and July. Right now, in the middle of the year, a significant number of seniors have either already crossed the cap or are very close to it. Seniors who have already crossed the cap continue paying at the pharmacy because they do not know they have crossed it. They never checked. They are paying for prescriptions that, under the law, should cost them nothing. Here's what I want you to take today, not this weekend, today. Call your Part D plan using the member services number on the back of your insurance card and ask for one specific piece of information. Ask for your year-to-date out-of-pocket drug spending that counts toward the $2,100 cap. Most plans also show this in the online member portal under your benefit summary or prescription history, but a phone call gets you the exact number directly. If you have already spent $2,100 on covered drugs this year, every covered prescription you fill from this point through December 31st should cost you nothing at the pharmacy counter. If the pharmacy charges you after you have crossed the cap, call your plan the same day. Do not pay and plan to dispute later. Call before you leave the pharmacy if you can. Your plan's member services line is required to address this, and any amount you overpaid must be refunded to you. If you have not yet reached the cap, but take regular medications that will take you close before year-end, knowing your current number lets you budget accurately for the rest of 2026, and helps you confirm the moment when the zero-cost threshold activates. Now here's a piece of this that most seniors have not been told about. And it directly affects which medications count toward your cap and how quickly you get there. As part of federal Medicare drug price negotiations, the government negotiated lower prices for 10 specific high-cost medications that took effect in 2026. Those negotiated prices apply at the pharmacy counter. The 10 medications are Eliquis for blood clots, Jardiance for diabetes, Xarelto for prevention, Farxiga for heart failure, and Entresto, Enbrel for rheumatoid arthritis, Imbruvica for blood cancers, Januvia for type 2 diabetes, Stelara, and Fiasp and Novolog insulin formulations. Make sure you check your tax return and call your Medicare plan today. You've earned these benefits. Make sure you're actually receiving them. If you take any of these medications, your out-of-pocket cost per prescription in 2026 may be lower than it was in 2025. That lower per prescription cost means you may reach the $2,100 cap at a different point in the year than you might expect based on prior experience. Knowing this helps you project your remaining drug costs accurately for the rest of the year. One important distinction to be clear on: the $2,100 cap applies specifically to drugs covered under Medicare Part D. Medications that are administered in a doctor's office, an infusion center, or a clinical setting. Certain cancer treatments and injectable biologics are typically billed under Medicare Part B, not Part D. Part B drugs have separate cost-sharing rules and do not count toward your $2,100 Part D cap. If you receive medications through infusion, that spending exists in a separate category. Your total annual drug cost exposure includes both, and it helps to understand which of your medications fall under which part of Medicare. Before we go to the action checklist, I want to speak directly to one specific group of seniors watching this. If your income is below approximately $22,590 as a single person or $30,660 as a couple in 2026, there is a federal program you may have never applied for. This program through the Social Security Administration could eliminate most of your prescription drug costs entirely, regardless of whether you have reached the $2,100 cap. It is called Extra Help, and it is also referred to as the Low-Income Subsidy. Extra Help covers Medicare Part D premiums, deductibles, and most co-payments. People approved for Extra Help typically pay between $0 and a few dollars per prescription for covered medications. The income limits are higher than many people assume. If your income is anywhere near those thresholds, make one call this week. Call the Social Security Administration at 1-800-7721-213. Ask specifically about the Extra Help program for Medicare Part D. You can also apply online at ssa.gov. June is a good time to apply. If you are approved, coverage can begin within a few months, reducing your drug costs for the second half of 2026 and positioning you fully for 2027. If you are not sure whether you qualify, call anyway. The SSA will tell you within minutes. There is no cost to apply and no downside to finding out. Let me bring everything together, as simply as I can. Everything we covered today comes down to 3 specific numbers you need to check before this week is over. Number 1 is your real net COLA. That is your January 2026 Social Security deposit minus your December 2025 deposit. Write both numbers down. If that difference was smaller than expected and you pay an IRMAA surcharge based on 2024 income, download Form SSA 44 from ssa.gov this week. Complete it with documentation of your qualifying life event, your retirement date or reduced income, and submit it to your local Social Security office. The surcharge reduction typically takes effect within 60 to 90 days of filing. Every month between now and when you file is an overpayment you cannot recover. Number 2 is your 2025 federal tax return. Find it today, physical copy, email, or transcript at irs.gov. Look for the $6,000 senior bonus deduction. Look for the $6,000 deduction if you are a single filer over 65, or the $12,000 deduction if you and your spouse are both 65 or older. If it was missed, call your preparer and ask about the enhanced senior deduction from the One Big Beautiful Bill. The fix is Form 104-0-X. The refund is waiting. Filing the amendment is not complicated, and the window does not close until April 2029, but the money is not earning anything while it sits in the IRS system. Move on this now. Number 3 is your year-to-date Part D drug spending. Call your drug plan today using the number on your insurance card and ask for your cumulative total. If you have already crossed $2,100, every covered prescription for the rest of 2026 should cost you nothing. Confirm that at your next pharmacy visit. If you have not reached the cap yet, mark your calendar for October 15th. That is the start of Medicare open enrollment, and you can compare plans at medicare.gov. 3 numbers, 3 actions, about 30 minutes of your time. That is the difference between leaving this money on the table and putting it back where it belongs. Every one of these 3 changes requires you to do something. The COLA arrived automatically, but the IRMAA recovery and tax bonus require you to file. None of these benefits comes to you on its own. None of them sends a notification. The system waits. And the people who capture these benefits knew which numbers to check. You watched this entire video. You now know what most seniors collecting Social Security and on Medicare do not. The next step is yours to take. If you found this useful, subscribe and turn on the notification bell. We cover every one of these Social Security and tax changes in plain language as they happen. Think of one person in your life who is on Social Security or Medicare, a sibling, a neighbor, a friend. Share this video with them. One conversation could put money in their pocket. Money that is already theirs, sitting unclaimed because nobody told them where to look. I will see you in the next one.